Hey everyone, welcome back to my channel. I hope everyone's doing okay, staying active and positive. Today we're going to talk about my long-term investing account. I'm going to show you guys how to invest, who and what to look out for when investing, and also how to spot a good deal from a bad deal when investing in the stock market. There are different strategies when it comes to investing. I personally prefer a strategy called the 4 M's of investing, and this stands for meaning, moat, management, and margin of safety. First, meaning you've got to understand the business. You need to know what it does, what products it's selling, and how it makes money. For example, Chipotle, we know it sells burritos. Obviously, if it sells more burritos, it makes more money. Never ever invest in a company all because your mom's hairdresser's best friend's nail lady tells you to invest in it. Next is moat. So back in the good old days, the times of kings and queens, horses and buggies, castles were typically built with a moat surrounding them. This moat served as a protection for the castle. Obviously, the wider the moat, the better it is for the castle. In a similar way, in business, you need to know your company has a moat around it. A moat is a competitive or economic advantage that helps your company survive long-term hardship. Kind of like what we're going through right now with the virus. You need to know whatever company you invest in is going to survive long-term and come out better. Next is management. You need to know who's running the company. Are they honest and are they passionate? And do your long-term views and values align with your long-term views and values? For example, if you're all for gun control, you don't want to go investing in like Smith & Wesson or Desert Eagle or one of those gun companies. Last but not the least is margin of safety. Once you're done with the first 3 M's, you're going to have to value the company by calculating what it's worth. There's several websites you can get this value from. I personally prefer Morningstar. Their link is in the description below, so go check them out. So once you have the value of what you believe the share price of this company, whatever company you're looking at is worth, then you're gonna have to decide what discount you want to purchase this company at. Kind of like you go to Target or TJ Maxx and purchase a clothing item at 50% off, you also want to treat your stocks the same way. You have to wait till that company gets to that discount amount before you buy it. I personally prefer 50% discount when it comes to my stocks. Long-term investing is all about patience. You have to protect your money. Warren Buffett, the greatest investor of all time, is once quoted to have said, there are only 2 rules when it comes to investing. First rule is never lose money, and the second rule is never forget the first rule. Today we're going to go over 3 of the 5 stocks in my long-term investing account. We're going to analyze how the 4 M's apply to these stocks, and we're going to kind of give each of these M's a rating from 1 to 10 of how I apply them when investing in this company. First company is Discover Financial Services, ticker symbol DFS. As far as meaning goes, they are a digital bank backed by the FDIC. They also offer payment services just like a regular credit card company would. They also give out loans such as personal loans, business loans, mortgage loans, and student loans. As far as meaning goes, I give them a score of 10 out of 10, as I believe banks are an essential part of the economy today. Next, moat. I feel like Discover has a terribly narrow moat, and that's because they are in a terribly competitive industry. The banking industry is really competitive. It's easy for us, the customer, to switch from MasterCard to Visa to Discover to Bank of America without even knowing the difference. So in terms of moat, I give Discover a score of 5 out of 10. Discover is currently managed by the CEO by the name of Roger C. Hochschild. He got his bachelor's from Georgetown University, which also happens to be the university of one of my favorite basketball players of all time, Allen Iverson. So Roger is a really smart guy. He's actively buying shares of Discover. You want a company where the CEO and management is currently and actively buying company shares. He currently has 1 million shares of Discover and has about $50 million of his own personal wealth invested in this company. I really like Roger's long-term views, so when it comes to management, I have to give him a 10 out of 10. Morningstar currently has Discover valued at a fair value of $80 a share. I currently own about 200 shares of Discover stock, purchased at an average cost basis of about $50. This calculates to about a 38% margin of safety or 38% discount. Discover is, however, projected to be worth about $300 in the next 5 to 10 years. So as far as margin of safety goes, I give them a score of 10 out of 10. In total, I'll give Discover a score of 35 out of 40. However, I don't plan on buying any more Discover stock unless they drop below a 50% margin of safety. This means their share price has to drop below $40 or more. Company number 2 in the list of 3 companies is Facebook, ticker symbol FB. As far as meaning goes, Facebook is a social media giant. We all know Facebook. Facebook is in the business of bringing people together both virtually and physically. Facebook currently owns WhatsApp, Messenger, the Gram, Instagram, and they are the #1 advertising company of all time right now. Also, they collect data and they probably sell that data too. As far as meaning goes, I give Facebook a 10 out of 10 because I believe bringing people together is a very, very essential part of today's world. Facebook has an extremely large moat, and this is due to their massive user base. Facebook is currently the 5th largest company in the world and is by far the youngest. Microsoft, the number 1 company right now, was started in 1975, so it's about 45 years old right now. Apple, the second, is about 44. Amazon, third, is about 26 years old. Alphabet's Google is about 21 years old, and Facebook, number 5, is just 15 years old. Facebook is not even legal to drink yet, but it's the 5th largest company in the world. As far as moat goes, I give Facebook a 10 out of 10. Facebook is currently led by its founder and CEO, Mark Zuckerberg. I really am excited for this company because it's been proven that over time, founder-led companies tend to do a lot better than non-founder-led companies. This is because they are both emotionally invested and financially invested in the company. Mark currently owns about 375 million shares of Facebook stock, which is currently valued at about $82 billion. Yes, he is by far the youngest billionaire right now. So when it comes to management, I give Facebook a value of 10 out of 10. Morningstar currently has Facebook valued at a fair value of $245. I currently own 10 shares of Facebook stock at an average cost basis of about $228.72. This calculates to a 6% off discount. Yeah, I could have done a lot better, but right now it's just a 6%. However, I do believe Facebook is gonna 10x in the next 10 years. Yes, the stock is gonna be worth 10 times more than it currently is. So as far as margin of safety goes, I give Facebook a score of 7 out of 10. In total, I give Facebook a 37 out of 40. However, I do plan on buying a lot more Facebook stock as soon as I possibly can. Last but not least is Berkshire Hathaway, ticker symbol BRK.B. This is currently a holdings company, and what they do is they buy up stakes in companies that are struggling. For example, they currently own 6% of Apple, they own 20% of American Express, they own 27% of Kraft Heinz. Think about that next time you're using some ketchup or some relish or some mustard. They own 10% of Coca-Cola, 100% of Dairy Queen, yeah, DQ. So next time you go drive over there to go get yourself a Blizzard and that flip upside down, think about that. Warren Buffett owns 100% of that company. He also owns 100% of Geico. Think about that next time you save 50% by bundling your home and auto insurance together. As far as meaning goes, I give this company a value of 11 out of 10. Yeah, there's a 1 point extra credit because they are just so awesome. This company has an extremely wide moat. This is because they are so spread out. They own so many companies and their revenue and cash pile is just so huge. As far as moat, I give them a score of 11 out of 10. This company is currently managed by Warren Buffett, the number 1 investor of all time. He makes investing look sexy, and pretty much everyone is willing to pay a premium just to own his company or to invest with him. On the scale of management, I give this company 11 out of 10. Morningstar currently has this company valued at a fair price of $228. I currently own 105 shares of Berkshire Hathaway stock, purchased at an average cost basis of $174.90. This calculates to about a 24% margin of safety. So as far as this goes, I give it a value of 8 out of 10. In total, Warren Buffett's company, Berkshire Hathaway, has a score of 41 out of 40. This is an A++++. They got so many extra credits. Currently, I have about $20,000 in this company. However, I do not plan on buying more unless they drop significantly below 50% off. So that's it for the video, guys. I really hope this video was helpful as far as making decisions on how to invest and what to invest in. I really hope everyone sees their money as a voting tool. Use your money to vote for whatever companies you want to see prosper and whatever changes you want to see in the world. That being said, guys, stay safe, stay healthy, stay active, stay positive, and I'm gonna see you guys next week in the next video.